Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape is experiencing transformative shifts as institutional capital floods into digital assets, propelled by regulatory tailwinds and technological breakthroughs. Bitcoin's unprecedented surge beyond $117,500 reflects accelerating institutional adoption, with analysts attributing this milestone to anticipation surrounding U.S. legislative developments. This bullish momentum could catalyze further capital allocation toward digital assets as traditional finance seeks exposure to the asset class, though volatility remains a consideration given the scale of recent gains. The institutional embrace signals deepening market maturity and may encourage broader acceptance of cryptocurrencies as legitimate portfolio components. Legislative frameworks were poised for pivotal advancement as the U.S. House designates July 14th to 18th as Crypto Week, featuring debates on 3 transformative bills. The Clarity Act aims to clarify jurisdictional boundaries between the SEC and CFTC, potentially resolving long-standing regulatory ambiguities that have hindered institutional participation. Simultaneously, the Genius Act establishes federal standards for stablecoin issuers, while the Anti-CBDC Surveillance State Act addresses privacy concerns around digital currencies. These deliberations could establish comprehensive regulatory scaffolding that attracts institutional capital through legal certainty, though political divisions may still complicate passage. Market participants are monitoring this closely as regulatory clarity could unlock significant institutional capital currently sidelined by compliance uncertainties. Quantum computing's evolving capabilities present existential challenges to blockchain security that demand urgent attention. Industry experts warn that current cryptographic standards underpinning major networks could become vulnerable within years, not decades. This vulnerability is exacerbated by slow governance processes. Bitcoin improvement proposals often require years for implementation, creating dangerous gaps between threat emergence and mitigation. Quantum-resistant solutions like hybrid cryptography vaults offer interim protection, but protocol-level upgrades remain essential. Market implications include potential shifts toward quantum-proof blockchains and accelerated development of post-quantum cryptography standards, which could reshape investor confidence in longer-term blockchain viability. Corporate stablecoin initiatives are gaining remarkable traction, with retail giants Amazon and Walmart exploring proprietary dollar-pegged tokens to circumvent traditional payment processors. This development follows Société Générale's launch of a euro-backed stablecoin across Ethereum and Solana, signaling institutional validation of blockchain-based settlements. If the Genius Act passes, expect accelerated enterprise adoption of stablecoins for supply chain finance and cross-border transactions, potentially disrupting the $700 billion payment processing industry. The efficiency gains from enterprise stablecoins could pressure traditional financial intermediaries to innovate rapidly or risk obsolescence. Ethereum faces critical inflection points as co-founder Vitalik Buterin warns against decentralization theater, urging stricter adherence to core principles. His proposed tests for genuine decentralization, including walkaway scenarios and insider attack resistance, could pressure Layer 2 networks to enhance security architectures. Meanwhile, the XRP Ledger's new Ethereum virtual machine-compatible sidechain bridges XRP and EVM ecosystems, enabling DeFi applications within the XRP ecosystem. These developments may intensify competition among smart contract platforms, with pragmatic solutions gaining developer mindshare over purely ideological approaches. Market fragmentation could occur as projects reassess their alignment with Ethereum's evolving philosophy. Scheduled token unlocks exceeding $782 million this month introduce substantial supply-side pressure, particularly the $629 million Trump token release. Historical patterns suggest these events often trigger short-term volatility as burly investors rebalance portfolios, though projects with strong fundamentals typically recover. Concurrently, projects like Bitcoin Solaris demonstrate enduring retail interest through successful pre-sales, highlighting market appetite for narratives combining established concepts like Bitcoin with novel features. These capital flows indicate bifurcation between speculative trading around unlock events and longer-term investment in infrastructure projects, requiring nuanced market strategies. Litecoin exhibits renewed momentum as halving anticipation converges with ETF approval speculation. Analysts note 95% probability for US spot Litecoin ETF approval in H2 2025, which would mark a watershed for non-Bitcoin digital assets. Technical developments like wrapped Litecoin on Arbitrum enhance its DeFi utility, positioning it as a potential bridge asset between traditional finance and decentralized ecosystems. These catalysts could reignite the digital silver narrative, though success hinges on translating technological enhancements into measurable adoption metrics beyond price speculation. Blockchain's potential to transform sports infrastructure is gaining empirical validation through high-profile implementations. Fan token platforms enable unprecedented engagement models, exemplified by FC Barcelona allowing supporters to vote on stadium aesthetics and UFC incorporating fan input into fighter bonuses. These applications demonstrate tangible utility beyond speculative trading, fostering genuine community participation. The transparency advantages for ticketing and merchandise authentication address industry-wide issues like counterfeiting and scalping, potentially establishing blockchain as standard infrastructure in the $500 billion global sports industry. Mainstream adoption in this sector could serve as a blueprint for entertainment and media applications. Quantum computing advancements achieved record-setting qubit coherence times, accelerating timelines for practical implementation. While promising for complex problem-solving, this progress intensifies the countdown for cryptographic transitions in blockchain. Projects proactively integrating hybrid quantum classical security solutions may gain investor favor as forward-looking investments. The emerging quantum threat landscape could accelerate industry consolidation around networks with robust upgrade pathways, potentially marginalizing projects with inflexible architectures. This technological race underscores the critical intersection between fundamental research and practical blockchain resilience. Market technicals reveal nuanced sector rotation despite Bitcoin's dominance holding at 63.8%. While major assets like Ethereum saw modest corrections, niche sectors like AI tokens and gaming ecosystems posted double-digit gains. The DeFi total value locked increased to $126.2 billion, despite NFT sales volume declining 30%, suggesting capital migration toward productive yield opportunities rather than speculative collectibles. These micro-trends indicate sophisticated capital allocation within the crypto ecosystem, with investors increasingly discriminating between asset classes based on utility metrics rather than pure momentum trading. The evolving market structure points toward maturation despite persistent volatility. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.